Hello and welcome to another edition of the Smart Investor Market Update. Today we're going to speak about the rally in stock market. The market, as of mid-morning here, is up on the day across the three indices and is looking very positive. But there is some roadblock ahead of us. There's a roadblock ahead of us technically on the charts that we're going to speak about. And we're also going to continue the theme of gold and analyzing gold to see how the market is reacting to the all-time low that was made, or the low that was made on the year. We're also going to take a look at the US dollar, the oil market, to see what's happening, how the reaction has been to the news of a quote-unquote deal with Iran. So we're going to speak about all of that this morning, because these issues are playing on the market. Okay, and if you'd like to take a look at the video market analysis for those of you who are listening to this via podcast, you can go to smartinvestorcentral.com and click on market update, and you will see the video market analysis so you can follow along with the chart. Okay, so what's happening is that the S&P 500 is approaching the top of a channel, and the market has been trading in this channel ever since February. So we're currently in July. So we have seen several months of the S&P 500 and the stock market on a whole just meandering between these support and resistance areas. So we're approaching the channel resistance up near the 2134 level. If we see, and it will be interesting to see how the price action behaves around this level, because if we get a rejection of this level, that could lead to increased selling in the stock market. So resistance is up at the 2134 level, and it's definitely something we should keep an eye out on. Taking a look at the Dow Jones Industrial Average, we see that the chart looks fairly similar to what is happening on the S&P 500. As of mid-morning here, we are unchanged on the day, but up slightly from yesterday. So we are actually up to 18,087, and we're up a couple of points here on the day with the Dow. The Dow is not currently at its channel resistance, so we do see some divergence here with the Dow and the S&P 500. As you can recall, the all-time high in the Dow is up at 18,351, and we're currently at 18,086. The Nasdaq, on the other hand, has surpassed its all-time high that was made, or the high that was made on the year, and is now rallying up to the 4,573 level. So the Nasdaq is leading the pack, and it's looking very the price action on the Nasdaq is quite bullish. Keep in mind that the all-time high, and not closing high here, we're speaking about the all-time high in the Nasdaq, is a price that was made back in the year 2000, and that is up at the 4,816 level. We saw the market spike up to that level, but did not hold on to that level and collapse. So the market, and that level is just acting like a magnet towards the prices, and I suspect we may attempt to challenge that area of resistance in the Nasdaq. So overall, the stock markets are bullish. The fear of the last couple of trading sessions, last week to week and a half, seems to have dissipated, and the market is currently again in bull mode. So that does not mean that everything is hunky-dory with, and everything is good with the stock market, but it just means that for now the selling pressure has been abated, and we are in bull bull territory. Now, would I be going out and be buying stocks at this level? Probably not. But if you're holding on to positions, it probably it's probably good to see how far this bull run takes us and keep those positions. So the stock market is up and doing well for investors. On the other hand, folks who are long the gold market is they are suffering because the market again today made a slightly new low for the month, and in the cash market that was at 1142, but the level we are looking for in gold is at 1132. So we are just about $12 above that level. And if we see a close below that 1132 level, that could issue even more selling here in the gold market. And so even though even though gold is touted as an inflation hedge, etc., as I said yesterday, it's all about when you buy. To make money in these in any investment, it's about buying at the right time. So even though the the case for gold is strong and it's a inflation hedge, yes, it is. It's also a safe haven play. It is important that you know that when a market is in a downtrend, and gold has been in a downtrend ever since 2011, it is not the best time to be buying when the market is making lower lows and lower highs, because that is that means that even you could buy the market today at, let's say, the folks who bought the market at in 2012 at 1700. The market is down now to 1100. That's over a 30% drop in the price. And while you have suffered a 30% loss in a particular asset, the stock market is going up. We have the dollar moving, the dollar moving up. We also have ETF plays, for example, IBB, the biotechnology ETF, that has been doing very well over the last couple of years, and that's a key to investing and the key to making money in the markets. You should always be looking out for the market that is experiencing gains and the markets that are trending, because that's how we make money in the markets, by trending markets. And the only way to be making money on the gold market now is if you are short gold, and you're actually short, means you are depending on a decline in the gold market. So is gold a buy at this point? Not necessarily. No, it's not a buy, and I'll be looking for signs of a turnaround in the future, but it just is not happening at this point in time. So I'm fairly negative on the gold market. And yes, gold could turn around soon. This could be a time when the market does turn around, but we are not seeing any evidence of it yet. And as soon as it turns around, then that will be the time to pounce and to make money from gold. The US dollar is up here on the morning. We were in a consolidation pattern, but we're up on the morning, and the market has broken out of that consolidation pattern and is approaching resistance at the $98 level in the index. Remember that the all-time high in the index for the year is not all-time high. The high on the index for the year is up at the $100 level. So we're seeing increased and continued strength in the US dollar. Now, how long will this strength last? It's anyone's guess, but for now the dollar is trending up, and if you are long the dollar against, for example, the euro, the dollar is doing very well against the euro. It's doing very well against the Japanese yen. It's doing very well against the Australian dollar. Is doing well against the New Zealand dollar. And for those of you who are strictly equity based and only invest in stocks, investing in and participating in markets like the dollar markets, like the gold market, like the commodity markets, are ways to diversify your portfolio. There are ways to diversify your holding, and you will find that when you're not dependent on the stock market alone, you'll have a more rounded portfolio, and a portfolio that is built to last even during stock downturns. Because if stocks were to turn around right at this moment, I can assure you there will be many investors that will lose a lot of money. And the reason is that they are almost 100% in just equities alone. And the financial markets have many other products, commodities, currencies that you can invest in and invest fairly safely in. Okay, taking a look at the oil market, we are down on the day, but we are still flirting with this $50 level, and I'm waiting to see if this market will approach the $40 level again, and that would be very good for consumers who definitely could use some reprieve or some further reprieve from the price of oil. It's always good to be paying less for gas, and remember, I just remember when oil was up at $140 and the gas prices were going up through the roof. It's definitely much better, and you'll have more money in your pocket when the price of oil is down. Okay, so that is the mid-morning report here, and as I said, we're looking to see how the market reacts around these old highs, and if we are able to pierce these old highs in the stock market, then that will be fairly bullish and fairly positive for the stock market. Quickly looking over to the FTSE, we see that the market is up slightly on the day. Was up slightly on the day. The chart pattern looks promising, but if we go below that $6,400 level, that could be fairly bearish. And taking a look at the FTSE index, the FTSE index was the analysis we just did. And for the German DAX, if we see a close below 10,500, that would not be entirely positive, while a close above this 11,600 level will definitely be positive and good for the markets. So that's what's happening in the markets. And remember, if you want to take a look at the charts of what we just spoke about, go to smartinvestorcentral.com/market update. And if you'd like the daily market updates that we do, go to smartinvestorcentral.com. On the right hand side, enter your name and email, and you will receive the cutting edge market analysis. Because the folks who stay ahead of the market aren't the ones who are surprised when things turn around quickly, because sometimes in these turnaround situations we can see them coming long before it actually happens. Okay, so I hope you enjoyed the broadcast, and I will see you again. Thank you for listening.